Fox Business Alert, NBA superstars, they are great at handling a basketball, but like a lot of us, they can fumble their passwords. Houston Rockets star Kevin Durant lost access to his Coinbase account after buying Bitcoin nearly a decade ago, when the token was trading around $360. Right now, it's at $115,340. Fortunately, the Coinbase CEO came to the rescue, posting on X, quote, "We got this fixed, account recovery complete." Coinbase CEO Brian Armstrong joins me now live from San Francisco after prowling the halls of Congress earlier this week to work on policy that maybe unlocks a whole bunch of other issues that have been behind closed doors for crypto and crypto stocks. Brian, good to see you. This story really resonates with a lot of people who have forgotten their passwords and have accounts that are locked, and well, it's painful to think they've lost ability to actually get out there and see or touch their Bitcoin. But tell me exactly how you were able to unlock Kevin Durant's account.
Yeah, well, we were glad to have Kevin Durant as an early investor in Coinbase, and he actually invested in Bitcoin too, very intelligently, along with his team. And I guess they made a little bit of a joke about it. And I guess they hadn't really reached out to try to recover the account because the price just kept going up. But when we saw that news, we obviously reached out to them and decided to try to make sure they got their account recovered. And in many ways, this is part of the benefit of using a service like Coinbase, is that if you lose your password, it's not like all your money's gone. You can come and reach out to us, and we'll go through the appropriate account verification steps to make sure that you'll get better access to it. And that's what's been done in this case.
Because in other cases, people have them in vaults, and once that password is gone and into the ether and out of their brain, I mean, I'm sure you've heard legions of stories about people who bought at $10, $15 and then can't access it now, right?
That's right. I mean, a lot of people do self-custody of crypto, which, by the way, I'm also supportive of, because I think that's important for self-sovereignty. People should be able to hold a bar of gold or hold cash in their wallet. They should also be able to hold their own Bitcoin. And we actually help customers do that as well in different situations. But when you do that, you also are taking a lot of personal responsibility to make sure you don't lose that password or that it doesn't get lost in a natural disaster. So we have different products for different customers with different preferences. But in this case, Kevin chose to use the main Coinbase app, and we kept it safe for him all those years.
Well, good job. Good job. You're going to get a lot of calls from people who are saying, unlock my account. Brian, you have been traipsing through the halls of Congress over the last week, speaking to members, I would imagine, of both the House and the Senate, because the House just passed the Clarity Act, which really establishes a framework for cryptocurrencies versus the Genius Act, which passed. And that, of course, was for stable coins only. Tell us exactly what's in it and what's happening with it now that it's in the Senate.
Yeah, well, as you mentioned, the Genius Act, which passed recently, provided clear rules for crypto stablecoins. This was a historic piece of legislation, and the Trump administration did an incredible job pushing this forward. Of course, both President Trump himself, who said that he wants the United States to be the crypto capital of the world, and folks like Senator Hagerty and David Sachs, and a number of people came together to pass that. There's now one more piece of legislation that, as you said, got bipartisan support in the House already and now is being debated in the Senate. And this is what we call market structure legislation, which just simply means it's covering all of the non-stablecoin crypto assets, things like Bitcoin and Ethereum. And it's resolving some of these outstanding issues from the last administration that got weaponized by people like Gary Gensler trying to go after the crypto industry because it wasn't clear, were these a commodity, were they a security? So this legislation is making great progress. I've never been more bullish on the chances to get it passed into law. This freight train has left the station, and there's people on both sides of the aisle in the Senate that are eager to get this legislation put on the books. Now, this hasn't stopped the big bank lobby from coming in trying to throw a wrench into things. They actually want to go in and ban rewards on stablecoins, and that was already settled in the prior Genius Act that I just mentioned. But I'm not too worried about it. The senators we spoke to aren't really going to entertain reopening that issue, and so hopefully this legislation gets passed into law very soon.
Well, listen, this is one of the rare topics that Congress comes together on. I mean, you look at exactly how this passed in the House, 308 to 122, with 78 Democrats. So we're watching the Senate very closely. One of the sort of new heads rearing, I wouldn't say an ugly head, but a concerned head that's been rearing, is not, individuals out there who are worried about whether they will be harmed somehow, or even the former Security and Exchange Commission was always complaining about everything regarding crypto. It's now the legacy banks who don't like the sort of credit card or rewards part of the Bitcoin Clarity Act. What would you say to them right now to cool or calm their concerns?
Yeah, well, every company should be able to have reward programs, just like there's credit card rewards or there's airline miles. And so for them to come in and try and ban that in the crypto industry is them just trying to block their competition. And I think most members of the Senate are not going to do a big bailout for the banks at the expense of the American consumer. American consumers want to just earn more money on their money. That should be totally allowed. Now, I don't want to completely throw them under the bus. I think that's one. These banks are so big; they have many different teams and people. Some of them, their policy folks are going around lobbying for that, which they shouldn't be doing. But other parts of these banks, we're actually partnered with them, and they've been very innovative. The other parts of the bank are actually leaning into crypto. They understand that this is a technology that's important to update the financial system, and they want to participate in that as well. So we're happy to partner with the banks and power their crypto custody and trading and payments where appropriate. We've done that now with a number of banks like PNC Bank. We partnered with JP Morgan, but their policy folks sometimes are doing a different playbook, and we'd rather that they just operated on a level playing field with every other company.
You went public back in 2021. I mean, you're kind of the old guy on the block now, but you look at how crowded the space has actually gotten. Obviously, last week, Gemini, the Winklevoss brothers, launched their crypto exchange. There's Webull, there's Bullish, there's eToro, so many out there. I mean, how do you leap out and stay out front where you are at the moment?
Yeah, well, I've been really pleasantly looking at all these IPOs happening in the crypto space. I mean, we want there to be a robust, thriving crypto industry. And it's true that we went out first. We became the first public company in the space. We're the largest. And I think that we have a good shot at continuing to do that. But we need to have a robust ecosystem of crypto companies. And really every financial service company, whether it's a bank, a payment service provider, a fintech, we want them all to integrate crypto into their products. That's how we're going to get a new, more modern, more fair and efficient financial system all over the world. And so what I try to think about from a Coinbase point of view to make sure that we're continuing to lead is that we're storing more crypto than any other company out there. And customers trust us with their crypto. And when they're storing crypto with us, they're more likely to use our products, whether that's trading or payments or earning, staking rewards on their assets. So as crypto continues to eat the financial system, hopefully we can provide more and more of those products. And ultimately, we want to be a bank replacement for people. We want to be their primary financial account. And we can offer better financial service products across the board, not just on trading, but even things like giving you a credit card that pays 4% rewards in Bitcoin, which we just launched recently.
Would you say that you have an ambition to become a super app and as you just said, replace the legacy banks?
Yes, we do want to become a super app and provide all types of financial services. We want to become people's primary financial account. And I think that crypto has a right to do that. These are just more modern, efficient rails. It makes every payment in the economy fast and cheap. It kind of boggles my mind, like, why are we paying 2 to 3% every time we swipe our credit card, or the merchant is? But whether the merchant pays it or it just means the price is higher when you pay it. And so either way, like, people are paying these fees. It should not cost 2 to 3% every time you swipe your credit card. It's just some bits of data flowing over the internet. It should be free or close to it. And so that's just one example of many things that crypto can do to update the financial system. And we're going to keep pushing on that frontier. We're
looking at Coinbase right now, and it's below its recent all-time high of 124,000 and change. It's at about 100 and, when we can throw it up right now, 15,000. Let me just check so that we're right up there. 115,300. So where do you see it, considering the Federal Reserve cut rates? We don't know if they're in a new rate cutting cycle, but when the Fed cuts rates, how do you expect Bitcoin to behave?
Well, the relationship between interest rates and stocks, it can always be complex. Like, for a long time, people thought these things were positively correlated, and now I think over time people are starting to think of Bitcoin almost like gold or something. It's something people might flee to in times of uncertainty. So it's a hybrid between those two things. But I try not to get too caught up in the short-term trends. What I try to do is look at the long-term trends. And there's a couple of big tailwinds now, which lead me to think that there's a good chance Bitcoin could be at $1 million per coin, by 2030 or so. And that's partly it's the regulatory clarity that's emerging. I mentioned the Genius Act, and now with market structure legislation, hopefully getting close, that could be a major moment. We also saw the United States of America now has a strategic Bitcoin reserve. So if the United States government is going to begin holding Bitcoin, I think that's going to be a massive driver of demand, and the rest of the G20 countries will probably follow suit. And then the last thing I'd say is that we saw recently the launch of the Bitcoin ETFs by a number of different firms, and Coinbase is actually powering 80% of the custody for those that are out there. But we're seeing a ton of institutional money continue to flow into Bitcoin now that these ETFs are live. So there's a lot of positive tailwinds for Bitcoin, and I think that there's never going to be more than 21 million Bitcoin ever made in the world, and lots of pools of capital still haven't gotten access to it. So that tells me this thing has a long way to run.
Brian, great to talk to you. Thank you very much. We'll watch you forge ahead to become a possible super app, and I'm sure Kevin Durant is very grateful that you unlocked his Bitcoin account, his Coinbase account. I've got one with you, but I remember my password. Good to see you.
Great. Thank you.